GameStop, the stock that everyone is talking about, and how it went up by about 1400% in just a couple days and made a lot of people a lot of money. I wasn't going to talk about this, but since I've gotten many questions about it, I've decided to do a video on GameStop and AMC and other stocks like Naked or Sundial, and why I wouldn't invest here right now because I don't consider it investing, although in theory it is, and also why I still would invest like this if it were another point in time, because who doesn't love money, right? If you know that the stock is going to skyrocket, then of course you should buy it. So in this video, I'll be giving my own opinion on what this means and why I would invest in these stocks, but why I just wouldn't do it now, and this isn't financial advice. Just my 2 cents on the topic. Now, first of all, let's talk about GameStop because that's the one that everyone is going crazy over, and how the stock managed to go from about $19.95 to over $400 in just about 4 days. So what happened here is called a short squeeze, and this is when you have a stock that you can sell when you don't actually own the stock. So here's how this works. Shorting stocks is very simple. You, the investor, borrows a stock and then you sell the stock and then you purchase the stock when the price dips, and then you profit the difference and you return the stock to the owner or the lender. So for instance, an example would be GameStop, right? You borrow 10 shares off GameStop when it's valued at $20 per share. These aren't your stocks, you're just borrowing them. You borrow the stocks because you really believe that the price will go down because you think the stock isn't worth much, or the company isn't worth much. So when you borrow the stocks at $20 per share, you then sell them, and then if the price falls to $10 per share, you can then repurchase the stock for $10 per share. So you borrowed 10 stocks and you sell them for $200. When you borrow them, they were worth $200 because each share was valued at $20, and then you sold them. Now you can repurchase the stocks at $10 per share and give them back, all 10 of them, to the lender, and you'll keep the $100 difference that you have. This is all there is to it. This is how you short a stock. Now, on the other hand, if you are wrong in your predictions and the stock actually goes up in value, then you'll still have to return the stock to the lender, and you'll have to pay a higher price than what you borrowed it for. So if you borrowed 10 shares when it was $20 per share and you sold them hoping the stock price would go down, but instead it went up and now the stock is valued at, let's say, $40 per share, and it's time to return them to the lender, then you need to now buy the stock back at $40 per share, which is going to cost you double what you sold them for. This is when you lose money. To make your money back, you would have to play the game until the stock goes down in value, and hopefully then you'd be able to at least recover some of your losses. So this is what happened to GameStop stock. It was shorted, and the Reddit group decided that they were going to pour money in and raise the price or inflate the price of the stock artificially. And then because they did that, the people who shorted the stock, which are hedge funds mainly, now had to start pouring money in and buying at a higher price. And this made the stock go higher and higher. And that's how that happened. Now, that's fine. That's great. And this can happen to other stocks as well, and it already is happening to other stocks, as I've seen in forums plans to inflate the prices of some penny stocks which aren't worth much right now. So would I invest my money here? Well, I've thought about it. I have. It's tempting, but I won't, and here's why. I'll give you 3 reasons. Reason number 1 is that there's a thing called trading halts. If a stock is very volatile for any reason, trading can't be stopped. This means I could buy in, and then because the price of the stock is artificially inflated by people buying in, and with an increase of over 1,000% in just a few minutes, the price would then plateau, and then the best case scenario here is I get out with what I put in. Worst case is other people get scared and start selling like crazy when trading resumes, and then the stock price plummets, which causes more trading halts, which then sends the entire market into a frenzy and panic mode, and then from there you can tell the rest. Also, you have to consider the position of the hedge funds that short the stock, right? They could still believe that the stock is going to crumble, and they could maintain their positions and put more money in, and you could invest and pull out with a lot of profits, but they can also decide to retaliate because this is like a tug war with traders. And so they could say, hey, well, I don't like you guys, and so even though it's going to cost me some money, I'm going to pull out, cut my losses, and let you guys suffer. Now, this is reason number one. It's too risky, and I will take risk, but not this amount of risk, especially when I realize that in just a matter of seconds, the stock could swing in any direction. It's just not for me, and I understand that, and so I'll stay away. Now, the second reason is because of what we've seen in the past 2 days. Trading halts can happen, but also entire brokerages can decide to stop trading the stock. Robinhood decided to stop trading, and so now you have a stock that is rapidly increasing in value, but it's based off this artificial demand. And so when these brokerages randomly, without any warning, stop trading the stock or they ban it, then naturally the artificial inflation ends and the stock price goes down. And if you bought in right before the high, you lose money. And while you're losing money, you may not even be able to sell and get out because trading is halted. Now, that's reason number two. And also, a lot of newbies are getting in right now. And when people think they're going to lose money or lose all their money, they'll pull out. Now, you could hold and ride this out, and maybe you could make a lot of money. Now, initially, I said I would do this if it were another time. And this brings us to reason number three, which is the only way I would trade like this, because I would definitely put money in to get 1,000% in returns in anything, even if it was a gamble. But I wasn't prepared. When I say I wasn't prepared, I simply mean I wasn't prepared to pour money into stocks right now or anything else for that matter. At the end of January 21, I'm just not prepared. And so I'm not going to be running around grabbing my stuff and running to the nearest pawn shop or dip into my emergency fund or my savings or my 401k to purchase a stock just because I think it's going to go up by 1,000% in value in a day or two. Now, you may be saying, well, Ian, if you know the price of the stock will go up, or most likely it will go up, why not buy? And this is because I personally plan my investments. If I don't have any money to invest, then I'm not going to stretch myself to invest just because I think I can make a quick buck. Last year, I was prepared and I was able to purchase in the stock market when the pandemic hit, and I was able to profit greatly from that. But right now, I'm just not prepared for this. I'm doing a lot of other things at the moment, and if I was already building up reserves to invest in something, then maybe 2 days ago, I would have invested in one of these penny stocks or even AMC, and maybe I would have made a lot of money. But because I'm not prepared, I'll just watch. I'll see people make money, I'll see people lose money, but I won't get involved unless I was actually prepared. Now, if you're thinking about GameStop and how you would have made a lot of money, but you didn't, here's what I want you to take away from this. Opportunities are always around and they're always coming, but you have to be prepared for them. Start saving, start doing the 52-week challenge, and so the next time opportunity comes, you'll be prepared and you can take advantage of that opportunity without having to stretch yourself financially. I spoke to a friend of mine and he had 20 shares in GameStop. As soon as word hit that the price was going up, he immediately used all the available funds in his brokerage account to buy in. He made money and he's actually out now. Now, I talked to him and I'm happy that he made money, but even then, I still wasn't going to invest because, like I said, I wasn't prepared for any additional investments right now, and so I'm out. Now, eventually, the stock is going to crumble. I know this because you can't artificially inflate the value of the stock forever. Even GameStop said it. There is nothing happening in this company right now that would cause the stock price to go up. The company is still worth whatever it was worth a month ago. So when that happens, I'm not sure when it will happen, but until then, people will make money, probably make a lot of money. People who invest right before it plummets will probably lose a lot of money. And so my final thoughts are this. More opportunities will always come, and you just, instead of trying to stretch yourself to get in right now, prepare yourself for the next opportunity that comes around. First, it was the pandemic, then it was Bitcoin, now it's this, and I'm sure there will be much more opportunities in the near future. Also, if you have money to invest and you want to risk it, then that's also fine because, as I said before, if I were prepared, I would definitely take advantage of the opportunities right now. Just don't go selling your car and pulling money from your 401k or your emergency fund because the headlines are saying that the stock is going to skyrocket and you'll win big, because you may, but that's a very, very high risk position to be in. Comment below and share your thoughts on this with me. Did you invest? Did you profit? Will you invest more? And what do you think about the entire situation here? So this is just my personal opinion and 2 cents on GameStop and other stocks right now. As always, thanks for watching. Be sure to give this video a thumbs up if you like the content. Be sure to subscribe and hit the notification bell so you get the updates when I post videos. And I do post videos here on this channel every single day on topics relating to making money and personal finance. Also, be sure to check all the links down below in the description for free and helpful stuff. Once again, thanks for watching, and I hope to see you guys tomorrow.